Good morning. A new week brings a change of government for Australia, with Tony Abbott's coalition the victors after Saturday's election. Abbott's first order of business is, of course, to start the repealing process of some of the previous Labor government's initiatives, which includes things like the resource rent tax and carbon tax, which is considered to be broadly supportive of business activity. While markets had priced in a decisive Liberal victory, there's a bit of a sense of political closure, I suppose, which has provided the Aussie a bit of support in the early hours of this morning, albeit it was quite fleeting. We did see a move above that 92 figure before a bit of a pullback. Nonetheless, we are seeing some moderate support back in play after the Chinese inflation data this morning. Political pundits are, of course, now focused firmly on the makeup of the Senate, which essentially decides how efficient it will be to pass key Liberal policies. However, until the Senate changeover in July of 2014, the Greens will remain in control, so it does render any immediate steps to repeal the carbon tax or mineral resource rent tax quite fruitless at this point. Looking back on Friday, we did see the release of the non-farm payrolls broadly negative for the greenback, and we did see a notable moderation of expectations the Fed will cut QE measures next week. Clearly, taper talk will remain a governing factor alongside more immediate matters as President Obama attempts to get congressional approval on this Assyrian strike on Wednesday. In terms of data, consumer credit data, jobless claims, PPI, retail sales, and the closely watched University of Michigan consumer confidence data will be on the US docket. Across the Atlantic, Euro traders will be looking at Italian GDP, German CPI, and the ECB monthly report. And sterling should find some direction from the latest jobs data. Closer to home, the flow of data from China continues tomorrow with industrial production and retail sales. Yen traders this week have a wealth of mid-tier data to look to, and it kicked off this morning with second quarter GDP and current account data. US dollar yen's, after an attempt to break that 100 yen, is sitting around about 99.7. Of course, it's considerably higher on the back of the Tokyo 2020 Olympic news. Looking over to the New Zealand markets this week, and certainly we've got RBNZ in focus. It is expected to see the central bank hold rates at 2.5%. Locally, we'll be looking at employment data and of course ANZ job ads data this morning did point to softer labour market conditions, but the Aussie dollar will be very much focused on what we see from this Thursday's employment data. Trade safe and enjoy your week.